Go to the events, network in the audience, go hang out at the bar, the restaurant, go hang out in the hallways, and talk to people about real estate at e-commerce events, because those people know they want to invest, be passive, and a lot of them have really big incomes, Adam. Like they're talking about massive income, seven-figure incomes.
Welcome. You're listening to the Apartment Investing Show. This is where you'll learn how to start or scale your apartment investing career. Your host, Adam Adams, continues to support anti-human trafficking causes around the world. Adam and his guests will show you how to create residual income by investing in apartment communities. Now, here's your host, Adam AAA Adams.
And we're back with the Apartment Investing Show. I'm your host, Adam AAA Adams. You're going to be excited because we actually have Josh Cantwell on the podcast. Josh has been a full-time investor since 2003, bought and sold over 700 properties in 25 states, regularly partners up with other investors, students to help them find and structure and negotiate deals for big profits. Josh currently manages over $37 million in private money, which is deployed into real estate using various Reg D exemption. He's a general partner on 2,600 units of apartments with JV partners. He also manages real estate private equity fund where he helps people, he lends money to fix and flippers, he helps people with rentals and apartment deals. And I should also say that Josh Cantwell is a true entrepreneur and prides himself that he has never had a boss. Not in his entire adult life. So with that said, welcome, Josh. How are you, sir?
Hey, Adam. Thanks so much for having me on, man. I know we've been working on this for a while. I love following your content, your podcast, your Facebook posts, private Facebook groups. Man, you do a great job. So thanks for having me on.
Well, it's just grateful to have you. I know you're crushing it, doing a lot of different things. 700 plus deals, that's crazy. Why don't you take me back to the very first deal, whether it was an apartment deal or a single family deal, just take me to the first one ever back in 2003. What were you going through back then?
Yeah, back then I was, very, very new at everything. I just graduated from college. And frankly, I knew I wanted to be in real estate. I told my mom when I bought my first house, which was in 2001, I was going to buy a duplex. She thought I was nuts. Like, what do you mean you're going to buy a duplex? You're 24 years old. What do you know about being a landlord? She told me, but I did. I bought a duplex. I did it all wrong. I paid full price. I got an FHA loan, but I moved into it. And I was managing money at that time. I already had a successful financial planning career. I started with my Series 6 and 66 and all those kind of things. So what I loved about it was I was able to live on the first floor. A buddy of mine lived with me, rent out the upstairs, and I basically lived there for $100 a month. And when my mom said, "How's that duplex going?" I said, "Mom, I basically live in it for free. Everyone else is paying off my mortgage, creating equity. I have no clue what I'm doing, but I'm living here for $100 a month." She's like, "Wow, that's way better than that apartment that I told you to go rent." And then shortly thereafter, I stumbled into a rehab. A friend of mine was driving through this C-class market called Slavic Village, which used to be populated with immigrants and steel workers in downtown Cleveland. One of those old neighborhoods that kind of went to hell a little bit, turned very quickly into a C-class area. My old buddy was literally driving through the area, saw some lady sitting on her porch, and leaned out and said, "Hey, what's this neighborhood like?" And she said, "Well, they're actually trying to sell this house." So we bought that little piece of crud for 20 grand, and we ended up fixing it. We were trying to flip it. Nobody wanted to buy it because it was in a C-class market, and we ended up keeping it as a rental, and I still own it today. So first two deals, I totally jacked up. But, I still own them both, actually. They're both nearly paid off, and they worked out. So the lesson is buy real estate and wait, even if you screw it all up.
Awesome story. So tell me, what are you focused on right now?
Yeah, well, frankly, we're focused on this COVID-19, pandemic, and we're looking at what kind of distress is going to be coming up on the market in the next 2 to 18 months. And so we're liquidating and moving a lot of the money that we have in our private equity fund. We're turning that into dry powder. We're turning that into liquidity, returning money back to investors, and we're helping them pivot into multifamily. We're looking at some of the mostly multifamily, but some self-storage deals and things like that. And also we expect there to be businesses for sale. We expect there to be office buildings for sale, retail for sale, all in the next 24 months or less. And so we think there's going to be some absolute home runs. Not really sure they're all going to be in multifamily, but that's our focus. And so we're trying to pivot those dollars out of the private equity fix and flip fund and really get ready to go on a buying spree in multifamily.
What makes it better to kind of get out of what you're doing now and really move into multifamily during, COVID-19, 2020 stuff? What's kind of the thought process there?
Well, yeah, Adam, we started telling our investors in the fix and flip stuff that, look, there's cycles in every market, right? And when you get into the point where you're at the peak of a market, you really want to get ready then for the down cycle to happen. And we thought there was going to be a normal recession that was going to happen in the next 6 to 12 months. And we told investors, look, this is not the time really to do big fix and flips, and to do hard money loans. We want to move these investors and these borrowers into, even if they're using us for bridge funding or for fix and flip, we really wanted to focus on an exit strategy of holding these properties, fix to hold, whether it's multifamily, big apartments, or even single family rentals. And so we started telling our investors that in third quarter of 2019. So we started winding the fund down at that time. We moved to a closed-ended fund, and we've been redeeming people out as payoffs come through, because there's going to be an opportunity here where people bought multifamily properties at 5 caps and 6 caps, and they paid them at full price. They bought them at retail value. They're going to lose some of those assets or sell them at a discount. And a lot of the investors that would have been in the market buying just normal, good multifamily deals at wholesale prices, value add, a lot of those guys are going to be out of the market because they're not good at raising money, or they were, they can't qualify for bridge loans anymore. Some of the bridge loan financing has dried up. And so there's just going to be, we feel like the competition is going to be a lot less over the next 2 years, and there's going to be a lot more deals to be had. And really, long term, I think this is one of the big focuses for any entrepreneur. To be really successful as an entrepreneur in any business, in any niche, you have to give up your short-term approach. And we were sort of long-term investing and sort of being transactional at the same time. And so we decided to give up all the transactional work and focus 100% on the long term.
Cool stuff. All right. So you did mention a closed-ended fund. Could you just let the listener know what is the difference between an open-ended and a closed-ended fund?
Yeah, pretty simple. Open-ended just means you're continuing to recruit capital, and closed-ended means you're not. Closed-ended doesn't mean you're closed and you're closing. It just means it's closed-ended. There's no more money coming in. You're not recruiting money from investors. So we went from an open-ended fund to a closed-ended fund. And then now we're actively actually winding it down. We've announced to our investors that we're going to close that thing down entirely, redeem everybody out in the next 18 months or so.
Okay. I like what you were saying about the 2 years, more deals, giving up your short-term approach. And I thought that was interesting because I feel like there's been a lot of apartment investors and other people that just come on the show that have told me and had told the listener that they felt like the COVID thing was going to be 2 or 3 months. It would be it all blow over, and we'd be back to having jobs. Nothing's going to happen to cap rates, etc. So I've heard a lot about that, but I actually would say that I agree more with you that I owned an apartment back in 2008 that I ended up losing in 2011, and I remember just what it felt like over those 3 just years of kind of struggling to try to keep it there when my my tenants were unable to make payments anymore. I wanted you to kind of talk a little bit about bring that out a little bit more. Why do you feel like this is going to be like a 2-year thing? Like you're going to find more deals over the next couple of years versus what some investors are thinking, oh, just going to blow over. This is no big deal.
Yeah, I think honestly, Adam, it's not necessarily just the apartment itself. You have to remember a lot of guys that own apartments, they also own other asset classes. They're not exclusive to multifamily and apartments. They might also own strip centers and office buildings. In other places, though, there's a lot of pressure. There's a lot of negative pressure. and your strip center tenants can't pay. Your office tenants are learning to work from home, so they're not going to want to renew leases. You've got all these major big box stores that are slowly bringing people back, and so the pressure is going to come from in multifamily that right now in April, May, like a lot of our collections we're exactly where we were in February and March. Like there's almost no change, frankly, in April and May. But all the government stimulus money is coming now. All the unemployment, the state, the federal, and the stimulus is coming out now. When the federal unemployment disappears, which is going to happen in July, and the extra stimulus money that's already been released is gone, you have to remember there's going to be still a lot of people that don't want to go to movie theaters, don't want to go to restaurants, they don't want to go to bars. And people that are in those industries, they rely on those paychecks, they're going to struggle. So with our own apartments, we focused on A-class and B-class apartments, and we feel like a pretty strong tenant base. We think we're going to be okay. And also for us, we only have to be at about 70% effective occupancy and collections to be able to pay all the bills. Well, a lot of other people, they're not there. Like they need 80, 85% occupancy to pay the bills. They syndicated, they paid too much, cap rate's too low. So there's really a couple factors there that I just described. One is the apartment owners that have other assets that they're going to lose will put pressure on their multifamily asset. Secondly, people that own C-class apartments are really going to struggle because those C-class tenants are really going to be hurt because they're not going to be able to get stimulus forever. And the third piece of it is that a lot of the competition that would have bought multifamily is not going to be buying. They're going to be focusing on some of the distress they have. And also in the past, maybe they could get a bridge loan at 80% financing. Now they might only be able to get a bridge loan at 65 or 70% financing on the acquisition. They've got to be really good at raising money, and they might not be really good at it. We are. And so we think we're going to be able to win there as well. So for all those factors, that's why we're going to play big in that space for the next couple of years.
What do you think sets you apart when I think you mentioned it a couple times on the show so far, just about how there's some people that are struggling with raising equity, bringing in that capital. Mm-hmm. What do you think it is that really sets your team apart? How come you're able to raise that capital? What are you doing differently?
Yeah, I think, Adam, well, first of all, and I hate to say this is an advantage because it's not something someone can overcome, but we've already been raising money for years. I was a financial planner starting in 1997 when I was a senior in college. So I've been in the capital markets, the financial markets, and raising money, managing money now for, this is going to make me sound old, but 25 years. I'm 43 years old, and I literally, when I was a senior in college, I was, graduating 1998, I was already in the financial market. So I can talk to investors now and say, hey, you know what you're going through right now with COVID? I witnessed that in 2008. And oh yeah, I witnessed it again in 2001 when the tech bubble crashed. I was actually managing money in 2001. And so that's part of it. The other piece of it is that we have a machine that raises money and gets exposure all the time. And so a lot of other investors, they only raise money when they have a deal. We raise money all the time, every single day. As a matter of fact, it's where I spend the majority of my time. And I have a marketing team and a personal assistant that does that. So while we're managing our assets, while we have other guys on our team looking at acquisitions, we have other guys on our team doing property management and servicing. We have a couple people on our team that just raise money. So it gives us a strategic advantage that we're doing it all the time. Matter of fact, we're doing even more now in the middle of this because there's so much confusion. A lot of people are pulling money out of the markets. I don't know if you saw the statistic, Adam, but there were roughly 10 times more money pulled out of funds during this virus, 10 times than in 2008.
I didn't look that up. No, that's
10 times
cool.
more money went to cash in the last 2 months than in all of the 2008, 2009 crisis. More people freaked out in the last 2 months and moved money to cash. So the market needs people educating. So when other people are out there and they're like, well, I'll raise money when I have a deal, we're out educating investors 24/7 about this is why you invest in long-term assets. This might be, we might struggle to even collect rents in June, July, August, Adam, but that's going to pass. And we're liquid enough. We've got a balance sheet big enough that we can withstand that. And then the assets are going to return to performance. And when they do, we're going to have an even better story to tell. So for all those reasons, it's really, really put us in an advantage. Of course, now I have to tell you, it has been more difficult in the last 60 days to raise money from some people because they have more questions. They're just freaking out, scared. They're an attorney who's like, I got to pay for my daughter's college education, and I don't even know if I can give you this $250,000. I just got to hang on to it right now. That's real. That's actually happening right now. But there's other people who are like, I just cashed out $500,000 out of my 401k, or I want to move all this into real estate because the stock market freaked me out. So there's the good and the bad there. You just got to be able to talk to each person wherever they're at that moment. And we do it all the time.
Love that. Well, I have two quick questions that I wanted to. Your answers don't have to be quick, but there's got to be a couple of listeners that are thinking to themselves, I definitely want to find more apartment deals. Josh has got the handle on this. He's got the 2,600 already units, and also you're able to raise money. So I just have two questions for you. One is, for the listener who needs to find apartment deals, what advice do you have for them? And then second question, what advice do you have for the listener who needs to bring in more equity right now?
Mm-hmm. So I'll give you a real quick answer on the finding deals and maybe something that's new that people haven't thought of. I just was talking to one of my real estate attorneys just a couple hours ago, and we were talking about that exact thing. And we were talking about how attorneys who are working in the bankruptcy space, the foreclosure space, and the receivership space are going to be very busy. They're like salivating because of all what they think is going to be a lot of distress in multifamily, some, not much, but definitely in the other niches that I described, retail, office. So one thing I would try that we're going to be doing is, instead of, we're for sure going to continue to network with brokers. Brokers are going to continue to own the market, especially all the stuff that's happening off market. So big commercial brokers, we'll be talking with them as we always have. But we're going to put a bigger focus on the real estate attorneys who are dealing in the bankruptcy, foreclosure, and receivership space, because they're going to see those buildings that are, seeing the forbearance. They're seeing the lenders starting to foreclose. They're seeing the lenders that are willing to maybe potentially do a short sale on commercial buildings. You can also obviously go through Pacer. You can go through the bankruptcy court Pacer. You can sign up for emails that will send you any of the new foreclosures in the commercial space. Like, those are some of the things that we haven't had to do in the last couple of years that we're going to be doing now, is dealing more on the legal side of those attorneys, bankruptcy, foreclosure, receivership, than just dealing with the commercial brokers. So we're definitely adding that as one of our acquisition techniques. Awesome.
And how about the money raising?
Yeah, I mean, money raising is not something that I think you can kind of start. We're constantly starting to make relationships with people. My favorite thing to do is, and I'm fortunate, I've got friends of mine that host events. I'd love to go speak actually at e-commerce events. One of my favorite things to do, one of my friends is a guy named Ryan Moran. You guys may know him. He's the CEO of capitalism.com. He's got a new book coming out, blah, blah, blah. But he's hosted a couple of e-commerce events. And those e-commerce attendees, man, some of those guys are just super liquid. And they're making a lot of money from their business. And then their business is worth 5 or 10 times their earnings, and they're looking for places to put it. And they're looking for places to put it very, very, very passively. So e-commerce guys that sell physical products through Amazon, through their own website, I love to speak to those guys because they're like, hey, I know real estate's a good thing. I know multifamily sounds awesome. I just want to invest in it. I don't really want to buy it and operate it, but I do want to invest in it passively. So that's one place that I would encourage everybody to go to more of those events, even if you don't get a speaking gig like I've done, but go to the events, network in the audience, go hang out at the bar, the restaurant, go hang out in the hallways, and talk to people about real estate at e-commerce events, because those people know they want to invest in passive, and a lot of them have really big incomes, Adam. Like, they're talking about massive income, 7-figure incomes, and they want the tax shelter that real estate can provide. So that's one place, again, I think over the next couple of years, as more and more of our habits move to online shopping, there's going to be more e-commerce guys that are making a lot of money and those guys want to invest in real estate. So that's another place that I'll be focused on for the next couple of years.
Cool stuff. I really liked both the answer for the unique ways that you're finding deals right now and what you're doing to raise money. It is something that needs to be said is that a lot of the apartment investors that I know that their goal is syndication. Mm-hmm. A lot of them are looking at syndication workshops. They're going to apartment investing conventions and trying to raise money. And sure, we all can raise some money there, but it's nowhere near what is going to happen when you go to an e-commerce event or when you go to a wine tasting or something like that, Rotary Club. Everyone else is thinking, I need to go to apartment events and try to talk people into not operating the deals, but instead giving me money to operate the deals. And it's a red ocean for sure. And so I like what you've said. We are going to take a quick break, but when we get back, we're going to talk about Josh's most creative deal. And so we'll be right back.
What's Blue Spruce Boardroom? It's Adam Adams' private inner circle program that helps serious investors take their businesses to the next level with 24/7 access to our private Facebook community, exclusive mastermind retreats held at luxurious resorts around the country, bi-weekly coaching calls, education, support, and monthly meetings. This is the full immersion you need in order to get from where you are to where you want to be in your real estate business. When you join Blue Spruce Boardroom, you'll become close with Adam and the other members of this exclusive inner circle. You'll meet accredited investors, deal sponsors, high net worth key principals, as well as real estate influencers. The perfect combination for you to take your business to the next level. Apply today by following the link in the show notes.
And we're back with the Josh Cantwell. I am so excited because we are going to get into his most creative deal. Josh, tell us about it.
Yeah, my most creative deal actually wasn't necessarily a deal. It was actually the start of an entire private equity fund. When people look at scale, and they can scale a couple ways. They can scale by owning rentals. They can scale by owning apartments. But we decided to scale. I was most comfortable scaling with lending. This was about 5 years ago. And so instead of just doing more fix and flips, more single family, we decided to create a fund. We recruited all the capital in the fund, and then we would lend the money out of the fund to other investors for fix and flips and small balance multifamily deals. And so for us, that created for us really a launching pad to being, sort of a magnet for raising money. And then that's what also got us into a bunch of apartment deals as well. So it was really creating a fund that could invest at scale instead of one particular deal.
That's exactly what we're looking for is anything that you're doing to really think outside the box. Everyone else, puts on these invisible, I guess not even, invisible is not the right word, these fictitious, like they're the boundaries on themselves. Like, I can't do that because I don't have the money. I can't do that. But you were able to do it. And just knowing that there's people out there that are opening up their mind to being able to do things like starting a fund and using other people's money, and now you can have 2,600 units, etc. So good stuff. What's a book you recommend?
So really anything by Jocko Willink. He's Navy SEAL. He wrote a bunch of different amazing books, but Extreme Ownership. The latest one I just added it to my Audible account 2 days ago. I've bought all of his kids' books for my children about being a warrior kid, and they're reading those now. I just got them for Easter a couple of weeks ago. And, I think any entrepreneur, you realize when you become one, whether it's in real estate, you started a business of other kind, you realize there's nobody coming to your rescue. There's nobody coming to just save your butt when you make a bad decision. And it all comes back to, you got to own everything. Everything comes back to you. So you got to be super detailed, work extra hard. So I love all of his messaging for both adults, for entrepreneurs, and for kids. So for sure, anything by Jocko is for families, for young kids, entrepreneurs. Great stuff. I go through it. I've been through those books multiple times.
Nice. I love it. Yeah, I just bought Extreme Ownership. a couple of weeks ago. I bought like
Dude, you've been through
12
some of
more
it?
books, and I haven't started it yet.
Dude, you're
I'm
gonna love
going
it.
through as many books as I can. I think I'm at 33 for the year so far, but that is one of the 12 that I literally just bought like 2 weeks ago, and so I should be getting into it anytime.
Highly recommend the audiobook, because the audiobook piece of it, he's actually got like gunfire you can hear in the background, and different things that he adds to his war experience that you don't really get from reading the book. So
Wow.
if you have the opportunity to listen to the book and read it at the same time, it adds a whole another element to the experience of the book. So yeah, highly recommend. That's how I consumed it. I loved it that way.
Good stuff. Josh, tell us, where do you think that the market will be in 5 years? We talked a lot about, the next year or two. Where do you think we'll be in 5 years? And then at the same time, where will your business be in 5 years?
Yeah, I obviously think that we're in the short term going through a massive recession. I think there's going to be a lot of weird things that happen, and I think that's going to last for about 2 years. I do think things are going to hockey stick back, even in a lot of sectors just in the next couple of months. But 5 years from now, I really think we found a lot of ways to build our economy, whether you like Trump or not, whether you like, whether you're right or left politics, I don't really care. But what I do love about it is I think we discovered ways to reinvent ourselves as entrepreneurs and as a country in the last couple of years. And so I do think this COVID-19 is going to put a lot of pressure on us. But 5 years from now, I think, again, I'm optimistic, and I really think we're going to be back to a lot of great things. We're going to be renegotiating with China. We're going to be taking businesses back from China. Things are actually going to be better, I think, 5 years from now than they were in 2019, which was a hell of a year for a lot of people. I really think things are going to, now, what's also going to be different, though, is the way people shop. The way there's going to be a lot of struggle, I think, in the retail sector. So, but in multifamily, I think things are going to be great. I think we're going to be in a very much 5 years from now, Adam, a work from home, work remotely environment across the board. And I think that's just things that we're learning from this pandemic. My business, frankly, we're looking at, the portfolio we have now, again, I don't own the whole thing, but it's a $300 million portfolio. So we think we'll be at close to $1 billion. We think we'll have over $100 million of equity capital raised. We think, again, this COVID-19 is going to spook a lot of people out. They're going to come back into the market, and that's where we'll be at. So, 10,000, 20,000 doors, that kind of thing. To be frank though, Adam, I'm a pancreatic cancer survivor, right? We haven't talked about this, and we can go down that bunny trail some other time. But in 2011, I was 35 years old, and all of a sudden, out of nowhere, I literally was laying on my living room floor looking up at this, the ceiling fan, and I found this giant lump on the left side of my stomach. And so I've learned to live for the now. So I have goals, I have my why, my reasons, and what I want to do in the next 5 years. But I operate in 1 year increments. I've learned that life can be shattered overnight. And this COVID-19, a lot of people are seeing, oh my God, my life is going to be so different in 30 days, 60 days. So I wake up every day thinking, what can I do right now? I definitely invest and think about the long term, but my long term is really more like a year. Like, what can I do in the next year? How is my balance sheet, my P&L, my relationships, my friendships, the money I've raised, the impact that I've had, how is it going to be different in a year? And I think looking out 5 years, 10 years, there's so many things that can happen that are crazy. It's tough to speculate.
Good stuff. How do you give back?
Yeah, my favorite thing to do is coach, man. Like, I have coaching in my DNA. Just a couple months ago when things were normal, like I was done with work at 3:00 on Mondays and Wednesdays, and I coach club volleyball. I coached. I know it's because of my kids, and anybody can say this, but I used to coach when I wasn't married and didn't have kids. I used to coach for free. I coached 6th grade basketball. I coached 8th grade basketball. I coached 4th grade football when I had no kids. And, so I'd like to give back, especially to kids, because I do think as parents, I think a lot of parents are making a big mistake. You have no idea, Adam, how many kids come to me as their coach and say, hey, coach, thank you so much. I love the fact that you're engaged in our practice, because when I go look at my mom, she might be here at my practice, but she's got her head down staring at her cell phone for the entire hour and a half. So she didn't see when I had that big spike. She didn't see when I caught the touchdown in practice. She's just there to drop me off. And I've heard so many horror stories already, Adam, of kids who've hit a home run, caught a touchdown, spiked a ball in someone's face in volleyball, and their parents are like, oh, I missed it. And I think technology is ripping away from a lot of parents their attention. They might be at the practice or at the game, but they're too busy chatting with their friends. They're too busy on technology. I get it. It's a massive, massive distraction. It's also a massive opportunity. But I like to give back to kids because I know when I'm on the court with them or on the field with them for a half hour to an hour to 2 hours, I don't have my phone. I don't have any distractions. I can fully immerse in them. And our season got cut short by this COVID, but all these kids, the text messages, the pictures that they sent my wife and my daughter and me about how much they loved the volleyball season, that means everything to me. And I know I'm having an impact on them. So I like to ignore the adults and take care of the kids.
I'm so glad that you mentioned that. That's really good. I love that. Josh, I really appreciate you coming on the show. Good stuff today. What is the single best way for the listener to find you?
Yeah, just go to our website, freelandventures.com. It's got everything about our apartments. It's got my latest book. They can download it and buy it. It's free. Just pay the shipping. freelandventures.com, and you'll see all of our different stuff there.
Okay, freelandventures.com. If you are listening, that's in the show notes, so you don't even have to worry about it. Just go ahead and click that button, and you can check that out. And also, it sounds like Josh has a free book. You just have to pay the shipping. Tell us a little bit about that book before I let you go.
Yeah, so that book is primarily about residential investing, but it's got one whole chapter about my experiences with pancreatic cancer and what I learned when my health and my life was put to the brink. So I think people, even if they're multifamily, big apartment investors, they'll enjoy that chapter. There's an entire chapter about 10 specific traits of elite entrepreneurs, things that I've witnessed in entrepreneurs, that the best of the best entrepreneurs, especially real estate entrepreneurs, the things that they're doing that other people are not doing. So that's a great chapter. And then the chapter about raising money. It's got 20, 30 pages in there just about some of the techniques, the marketing strategies, the mindset, the psychology of raising money. So even if someone's more of a multifamily, a big apartment investor, they still love the book. It's called The Flip System, but really, even if they're not flipping properties and they're focused more on acquiring big properties and big multifamily, like a lot of your audience, Adam, still a lot of value in there in those couple of chapters.
Awesome. I encourage the audience to go to freelandventures.com, check out that book, and it sounds like it'll be a lot of value. Josh Cantwell, thank you for coming on the show. I really appreciate it. A lot of insightful things coming from how to find deals, how to raise money, talking about the 5-year picture and the 1-year picture because of pancreatic cancer and just kind of living for tomorrow, even though you obviously are investing in long-term assets. Just the mindset that we got from you today was great. I really appreciate you coming on. I'm going to let you go, but until next time, my friend, think outside the box. As a reminder, any investment opportunities mentioned on this show are for accredited investors only. And if you're interested in working with me and my team, then go to realbluespruce.com and click Get on the List. It's that simple. Just click Get on the List to start passively investing. This has been an episode of the Apartment Investing Show with me, Adam Adams. All rights are reserved, and if you haven't done so already, then make sure that you absolutely smash that subscribe button, and I'll see you on the next episode.